What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I'm the bearded boy wonder, Dave Bartosiak, and today, my friends, we're talking about Dave & Buster's, ticker PLAY. Now, a couple of housekeeping things while I got you here. The first of which is this is a travel week for me. I'll be heading back to Chicago on Wednesday. Dave, why do you always fly on Wednesdays? Because it's cheap. I got a round trip with the big seat on Spirit. Now, a lot of people talk garbage about Spirit Airlines, and I hear you. But the big seat on Spirit Airlines is like flying first class. There's only two of them in each row on each side, and it's great. It's fantastic. So, round trip, big seat, $240. That's right. Because I don't even bring any bags. I just go shopping when the plane lands. Just kidding. I have stuff in Chicago, like I have stuff here, so that's awesome. But anyway, so I'll be traveling on Wednesday, so what that means is this week's a little bit, and I already emailed you guys about it. We're going to break it up. So we're going to do Dave & Buster's today. We're going to do Ambarella tomorrow in the morning, because both of these guys are going to report after the bell mañana. Wednesday morning, I'm going to go ahead and do the morning after, which will be great. We get to touch base with you guys prior to, obviously leaving Wednesday night for Chicago. And then Thursday, Friday, I'm going to figure it out. When probably Thursday morning, I'll figure it out. So sorry to leave you guys kind of, in limbo there. But I don't really know what's going to happen in Chicago. I gotta see what's up. So there's that. Other bit of housekeeping is, in case you guys haven't checked it out, we've got a sweet chat room here for you to check out. So it's on this eChat site. Here's the actual link. So it's echat.co/room/213012. And this is open 24/7. So the cool part is you're able to come in here, talk, whatever, chat, which I think is super neat. And it also kind of saves, it'll kind of stick around here. I think there's a way where we can go, I don't know, maybe make this longer, more historical. We could put it in there. But what we're going to start doing is we're going to start trying to use this for kind of everything. So even our chat that we have here, right? We've got the chat from YouTube. So we're going to try and incorporate everything onto here. So I'm not forcing everybody over here, but this is what I'd like to do. Just kind of send the people to the eChat. It takes a little bit. You got to get kind of signed up and such, but it's free and it's very minimal. You just put your name and an email address and get a thing. So, so for today's action, I'm just going to kind of tell you guys about this. We're going to slowly incorporate this over time. Obviously, I'm still going to respond to our live chat that we have on YouTube. So I'm still going to do that. And we're just going to kind of go from there, okay? So let me go ahead and put this here. I got the live chat here. Going to send that out. So we'll go from there, right? So that, I think, is going to be a cool resource, having that chat room open 24/7. So I'll put announcements in there, touch base with you guys. And then, like I said, heading back to Chicago, we're going to see what kind of resources these bad boys give me. I think you guys are going to like whatever happens. Let's put it that way. So we're going to see. There's going to be some changes, but I think it'll be awesome. So there you go. All right. And again, as always, guys, a little bit of a delay from when I talk to when you hear it, but the chat, I do believe, is real time. So let's go ahead and dig in here to Dave & Buster's ticker PLAY. Now, as always, the black line corresponds with the right y-axis, which is the price. The multicolored lines represent the evolution of our Zach's consensus estimates over time. The little green arrows are earnings beats. Red arrows don't exist right now for Dave & Buster's, which is great. And what you'll notice here is continuous upward trajectory in the price consensus and EPS surprise chart. So this is good. As a result, you've seen a stock that has continued to trend upwards also. Now, here's a little trick for you guys. If you happen to be mulling over some of these price and consensus charts, and you see the PNC start to move upwards at a time where you see the stock price kind of come down, that little bit of divergence is usually a buying opportunity. So you like to look for stuff like that. So what happened here too, where this is coming downwards while the EPS is still hanging in there. But this is on sort of a grander scale. It's harder to see, but just so you know, when you're looking through Zacks, if you look at these PNC charts and you see that, it's an opportunity. Now, recently, we've still got nice earnings growth year over year that they're forecasting. Pricing consensus overall looks pretty darn nice. And since bottoming out at 41 in, what is this? This is the December? Is that where we're going to? If you notice, guys, it's not our usual pricing consensus where we're going back years, 5 years. We're just going back to basically the end of 2014 here, because that's when Dave & Buster's started trading publicly. So essentially November of this year, right before Election Day, stock's under 41. Since then, this bad boy's near 70. Pretty nice run there for Dave & Buster's, okay? Now let's go ahead and take a look at the detailed estimates chart, see what some of these other guys are saying about Dave & Buster's. They are Zacks ranked number 3 hold right now. Value style score of C, growth of A, momentum of A for overall VGM composite score of A. As I said, they're going to report after the market closes on June 6th, which is mañana. Currently in the top 35% of our Zacks industry rank, but as far as their industry peers go, I don't know that there's many publicly traded companies that are quite like Dave & Buster's. Look at the revenue growth here, very solid year over year, 14.47% revenue growth for the current quarter. Next quarter looks like 14.34. Overall, the year 16.32. Next year number looked like 10.48. So decent revenue growth here on Dave & Buster's. And if you look at the EPS side, it's there as well. 11.57 for the current quarter. Next quarter, 13.33. Current year, 15.63. Next year number looks like 11.46. So still very decent growth numbers year over year. As for the analysts, they've been compelled recently. If you look just the last 7 days, you'll see there's been an analyst raising their next quarter, current year, and next year expectations for earnings. That's a bullish sign when you've got somebody with the chutzpah to stand out there and increase their earnings estimates just a week ahead of earnings, okay? So that's good. But the overall effect to the Zacks consensus estimate wasn't much. And that's the reason for the Zacks ranked number 3 hold, because even though these guys came out and increased their earnings estimates, it only increased by a penny for the next quarter. Look at the current year numbers. They've gone up 6 cents. Next year's gone from 263 to 271 there, okay? So still growth, but nothing eye-popping in terms of the consensus estimates. So that's why it's a Zacks ranked number 3 hold right now, just because people haven't really jumped out there and had the courage to talk about it. Now you're looking at surprises. There have been some decent surprises. Don't look so much at the percentage, but look at the actual number here, and you'll see a nickel last time, 12 cents, 6 cents, 13 cents. So they've had some decent surprises. They do a good job managing those earnings expectations, and they've been doing it well. And here we go. We have that unidentified analyst. New 244, old 244, new 274, old 273. So just inching upwards there. Okay. I don't want to let's look at revenues first. I wanted to look at some long-term revenue stuff. And then here you can see it a little bit more plainly, the revenue growth that we've seen in Dave & Buster's, and they've got them in the retail food and restaurants market. If you've ever been to a Dave & Buster's, you know it's not exactly, you're not going there for the shrimp, right? Like, you're going there for the games, which are expensive, but whatever. It's like an adult Chuck E. Cheese, basically. So if you look at 2016, you got 16.1% growth, 17, 15.94, 2018, 16.3, 2019, 10.48. So decent revenue growth across the board. It's been pretty solid. They haven't really disappointed. So these are all very good things to see in terms of revenue growth. Zacks rankiness is something I wanted to look at also. We can see some historical Zacks rank here. on Dave and Buster's. And they've pretty much been in the good graces of the Zacks rank forever, right? A couple of times where really just one period where they got marked to sell, but since then it's either a hold or a buy for the most part. And the stock has gone on a nice little upwards trajectory. Overall, it's been nice, but really took off recently. And then I'm just going to pull up this consolidated surprise just so we have it there for when we come back to it. But now I'm going to take a look at the technical chart here. And again, we see the picture of election day. This is an earnings gap. Faded. Earnings gap. Faded it. Found its way back to the 50-day moving average. Dean, that is ZRS. So this is like an institutional research package. I think they do have it available in a certain form on the retail side. I can look into it for you. I can let you know. Anyway, so they've come back to the 50-day here into early February, found support, and then have rallied again. So this 50-day moving average has really been key along this ride here. And currently, that 50-day sitting down at 63.84. Okay. And looking at the money flows, they've been relatively positive. Nice big move up in the money flow in May. And then have come down a little bit, right? So there has been, money flows have come down a little bit, and the stock's been flat to up-ish, right? I've come to learn that this little fade down to zero is really not a big deal. It's when you get something like this. If the stock was going up, that would be some real major divergence. But here they were actually going in line with each other, so that made sense. So anyway, coming back to the zero line it's not really that negative of a thing. A little bit of short-term volatility recently. You can see this commodity channel index chopping all over the place. Pretty wild there, as the stock has kind of fought around in here. Why are they fighting so much? Bottom end of this range, 64.50. Top end was 66.50. They broke out from that. And, you know, I mean, you guys know pretty much everything broke out last week, right? You can see that on the S&P 500. So it's to be expected, I suppose. And you can see the move up there, 68 or 68.65. It's kind of where we're at 52-week highs. So we're seeing a lot of this where these earnings are all the way up near their highs. Or the stock's up near the highs heading into earnings. So we've got that. So what do you want to draw? Some fibs maybe? Give us some downward? We don't even have to be that cute, okay? We can use a swing low at 64.50. We already had the 50-day moving average. These are areas of potential support should this thing start to unwind to the downside. And to the upside, it's anybody's guess, right? Pretty much. This thing's just going to keep on trucking. Maybe, if it has a good report. This is one of those gaps that, does it ever get filled? You know, maybe not. And if it does, it's going to take a while. You can see the volume coming out at these price levels. And that recent big chunk of volume, obviously right where we're at in the 66 area. But I like that the market is probing higher after fighting through that area. So these are all pretty good signs. All right, let's go ahead and take a look at the options chain. Let's go to the front month. June's. Change it from the side by, or change it from the stacked view rather to the side by side, and we're looking what, 68.59. So we can basically use 70s or we can use 65s. It won't matter. Let's just use 70. Let's use 65. Now we'll use 70s. 70s closer. Let's do this. All right. So that call right there, 225 by 240, we'll call it 233. Add that to the cost of the put, which is 350 by 390. Let's call it 370. So the market is expecting about a $6 move at 70 bucks, so 8.6%. 8.6% or $6 is what they're expecting on Dave and Buster's. How does that match up historically? Well, last quarter barely budged. The quarter before that had a huge move. Then we got just negative 3.5, then a huge move, then nothing. Few quarters of nothing. Here's another move in July, and then nothing, nothing. October. So October quarter, although this is the first one after their IPO, right? So take that one with a grain of salt, because it takes a little bit for these guys to kind of fill in and figure out what the heck is going on with the company. So I suppose we'll look out and see really just the last few reports, I think, is what we should gauge on. And you see an 11, a negative 3, a 16, a negative 1. So kind of a crapshoot, really. We're not getting a lot of information from this because it's kind of all over. No really clear pattern. Plus, it was a recent IPO, so I don't know. The last January report didn't do much. Do we have a January 2015? Didn't do much. But so then the April following that moves a little bit, actually. 2015, not too much. I don't know. Maybe it'll move. And remember, don't forget the type of market that we're in. We are in sort of a breakaway, charging forward market here that has been rewarding names for the most part. See, there's been a bullish tilt, except for some of these guys in retail, right? But a place like Dave & Buster's, I think fits a nice little niche. Anyway, so $6 holler is what we're talking about. So with the stock trading at 68 and change, you're talking 62 to the downside, 62 and a half. How did that correspond with what we had here? We have almost 64 as the 50-day moving average, so maybe that's a little bit over. I think that would be a little bit overcooked for this thing to get down below the 50-day moving average. It would have to be a bad report. And then to the upside, 74, which, is a gap up to here, which very well could happen on a good report. Happened before? Okay. So let's change from the side-by-side view to the stack view. So we get our calls on the top and puts on the bottom. So we're going to put together, this is the thing with this. We're not going to come through here and do 4 different trades like we usually do. Just because, well, I guess I could. But this is the thing. There's not a lot of strikes that we're getting here, right? We're at 65, 70, 75, so it's every $5. So we don't have a lot of options to choose from. And we don't have a lot of expirations to choose from either because they don't have weeklies yet. This is definitely a stock that needs to get some weeklies, I think. So anyway, so what I'm going to do is I'm going to do a debit spread going out another month. But I'm going to do a credit spread in the front month. Because again, it's all about that post-earnings drift, right? But then again, guys, remember last time? So last time I had a big earnings spike and then it gave up some of that. Big earnings goes sideways. So it seems like a lot of this reaction actually does happen early on for Dave & Buster's. Like it's immediately following the report and then it kind of goes flat. Let's look back at the price consensus EPS surprise chart because we can see when the earnings came in and then how the market reacted. So here's one sideways, chopping around. I don't know. It's like they make their move and then they fade it or just chop around. So make it. So maybe we should be, except for last quarter. Last quarter was a situation where they beat came down a little bit, and then that post-earnings drift caught them, right? So it's only really happened once where the post-earnings drift really caught on, right? So maybe we should be a little bit more impatient with this and just look at that front month. You see, you like how I talk myself into things? I always do that. Oops, always talking myself into stuff. Okay. And look at that. We've got the chat room going. Just so you know, we're going to do another plug. Another plug for the chat room here, guys. Look at this. Got guys participating in the chat. I love it. You see this, guys? We're thinking outside the box. We're talking about other things. Again, we've got the link for that in there, that echat.co/room 213012. So that's going to be going after this live chat goes away. And that was one of the negatives of the live chat that we do with YouTube, is that at the end of the video, it's gone. Whereas here is a place where you guys can hang out. We can talk things. We can type stuff in, you know, and look back and see what happened, right? So you guys can go ahead and check it out. All right. Shameless plug for the chat. Done. All right. Let's go back to focusing on this front month play on play. See what I did there? Now, just looking at the strike prices that we have available, going all the way out to 75s is, on the bullish side, is outside of even the realm that the options market is pricing in right now, and likely more risk than people want to take if you're going out just a couple of weeks. And I would agree with that. So I think what you have to do is just do like a 65-70 call spread if you want to do the debit spread here, right? So let's go ahead and price this out real quick. 65 call is going to cost you $490. Simultaneously selling the 70, you're going to get back $225. So that's $265, your net outlay. The amount of money you have at risk is that $265. What you could make, it's the difference in the strike prices, which is $5 minus that $265 or $235. So in this case, we're only going to get 88% is what we can gain on this. So, and that's going long premium. And so why is this happening? Why is that the case? Well, you're talking that 65 call is almost $3.50 in the money already. So $3.45 of that is intrinsic value. So then the 70 call, you're getting back above and beyond that, but the 70 call is $1.50 out of the money right now, and it's just not enough to make up for. You're not getting enough premium here really to make up for the intrinsic value that you're paying for in the 65 call. Okay, so most of the time we construct a debit spread, I want to see at least the ability to double up on that call spread, because otherwise, to me, in most cases, it's not worth the risk. So when I see something like that, then I instantly go, okay, well then maybe we should be looking at credit spreads instead. But this presents us with another little bit of an issue, and I'll show you what. 65-60. So in this case, this is a credit spread. If you're bullish on the stock, rather than going long on a call spread, you go short on a put spread. So in this case, sell the 65 put. You're going to get 138. Simultaneously buying the 60 put, 33 cents. So in this case, your net credit would be 105. But the difference in the strike prices is still that $5. So you would have $3.95 at risk on this trade. So you're going to get 105 with $3.95 of risk, or 26.5%, which is decent. That's kind of what I look for on these credit spreads, is I want at least a 25% gain that I could get. Now, what would have to happen in that case is that shares of Dave & Buster's would have to close at or above 65 at expiration. Going back to the chart, we do see that 65 is kind of the bottom end of this consolidation range. So as long as they have a decent report, I think I'd be comfortable there. So I think that maybe the way to go then is either looking at that credit spread or going a little further out on the debit spread. So let me just go ahead and put a bull credit is short the June 16th 65.60 put spread for a 105 net credit. And I'm going to go out to the next contract month, which is July, and look at what this debit spread looks like. Now in this case, you can keep the same strikes at 65.70, and let's just price this one. So in this case, 65 is going to cost you $5.70, simultaneously shorting the $70 call. You're going to get back $3.03, so $2.67. So there's only a 2-cent difference between that front month and this back month. So you get much more time in this case for some of that post-earnings drift to take place, if you truly feel that the post-earnings drift is what's going to happen. But here's the other part about this, is that the difference in strike prices is still $5. So minus that $2.67, you're only going to be able to make $2.33 on $2.67, or 87%. And again, it's not really within those risk parameters that I stated before. So even here, I wouldn't mess around with this one either. Okay, I wouldn't. But perhaps patience can be rewarded by doing something like selling that put spread a little further out. And in this case, we might be. So here, selling the 65 put is going to yield $2. Simultaneously going long the 80, you're going to give back, simultaneously going along the 60 rather, you're going to give back 83 of those cents. And this is in, again, the July expiration. So it's 117 net credit on this one compared to the 105 in the previous case. So that means the amount of money you're going to have at risk is going to be $383 on this one. So this would be good for 30%. So it's another 5% that you're going to get, but you're adding 4 weeks. So rather than getting it in 2 weeks, you're adding 4 weeks just to get 5%, right? And you got to think of these in terms of that perspective. So maybe that doesn't make the most sense either, right? So I think the way to play this thing is you're going to be in this front month, and that's what you're going to need to do. Now, I know a few of you guys like messing with the calendars or the diagonal spreads, and then a few of you guys have told me you do not like messing with those. But this might be a good candidate just because of the lack of the other flexibility that we have in terms of the strike prices. So if you are bullish on this, you may be able to get vertical by going short the 70 in the front month while buying the 65 in the back month. So your net outlay is going to be a little bit more, but the good news about this is that you're not going to have the 70 lingering over your head after that front month option expires, which brings added flexibility because then you'll be able to possibly sell the 70 if the stock rallies, or you just let it go, which is another benefit too, right? So there's a couple options. So I'm going to show you that diagonal here. So a bullish diagonal. So I'm going to put basically bull diag here in the comment section, would be short the June 16th $70 call. In this case, that $70 call again is $225. Simultaneously going long the July $65 call. In that case, it's 570. So add this to 570 for a 345 net debit. So 345 is your net debit. Now, a couple of different scenarios, and we've been talking about these recently. I think we did one on Home Depot. We did another one. So if day one Dave and Buster's rally sharply, right? That's 70. Let's say it gets over 70. The 70 gets called away from you. You're going to have to go ahead and basically sell the cover. You sell your July 65 call, which will be worth a lot of money, and then you'll make bank, right? You make a little bit of money, but it's not going to be doubling or tripling. But if it stays under 70, even if it's 69.5 at expiration and then continues to rally, kind of get that post-earnings drift, that's the ultimate scenario for this, right? So then your break even on it is 345 plus 65, so 68.45 would be your break even on a stock right now that's trading at 68.44. So it's basically right where we're at right now, okay? So, and yeah, you can do the 75, of course. That's an option also. No, that's just, you're just saying you're giving it a little bit more room to run. But when you do that, you're also increasing what your break even is going to be and the total amount of money that you have at risk. That's all you're doing, right? Risk versus reward. So you can certainly do that if you like. Okay. So those are some of the bullish plays. Now the bears, I think the bears are going to have a better risk reward profile. So are we going to stay here in June? Yeah, just looking at June, look at this 70-65 put spread. In this case, going long the 70 is going to cost you 370. Simultaneously shorting the 65, you're going to get back 138. So in this case, your net outlay on this is only 232. Now remember, the difference in the strike prices is still 500. Minus that 232 is 268, which you can make on 232, or 115%. So the bearish case has a better risk versus reward here, just in terms of the numbers. It actually frightens me to see, Kurt, that they're 100% bullish on StockTwits. I've shied away from using StockTwits as a contrarian indicator because it'll just complicate things, really, I think. Because sometimes they can actually be right. So I don't know. I get it, but I hate using that as the because a lot of people do that. They use it as a contrarian indicator, and seeing 100% bullish on that actually makes me nervous, right? But sometimes they're right. Anyway, so I'm gonna say a bear debit here is even in this front. Well, you know what? Let's not make this the official move here yet. Let me go out to the July expiration and just do the math on this debit to see how different it is. So the same strike prices we're going to use, 70, 65, 430 minus 200, so it's 230, so it's almost the same thing. But this gives you a little bit more time for the wheels to catch, right? But we have seen at Dave & Buster's that if it moves to the downside, it's going to move to the downside sharply. And that's what I do believe, is that it's going to gap if it moves. If it moves, it's going to gap. So just based on the behavior that I have seen here with Dave & Buster's, if I were bearish, I'd say the bear debit is long. The June 16th, 70-65 put spread for a 232 net debit. And then on the credit side, they would have to sell the 70.75. So on the bearish credit, selling the 70 call, this is in the June 16th expiration, would get you 225. Simultaneously going long the 75 call, you're going to give back 90 cents of that. So your net credit here is going to be 135. So divide that by, in this case, difference in strike prices is $5 minus that 135. That's going to give you a 365. So almost a 37% rate of return you can get on this one. So Bear Credit is short the June 16th 70.75 call spread for a 135 net credit. Okay. So again, not a lot of flexibility in the way to play this just because of the lack of the strikes. Lack of options in general. We've got open interest is basically right there at the 70s, and that's it. They don't have weeklies on Dave & Buster's yet, so this is something that I think is going to get more attention here moving forward, but for right now, it's just not getting it, right? And overall, what's my pick going to be? You know I'm going to be bullish just because of this. I can't argue with this. You can't argue with the earnings, and earnings consistently going higher. The research reports that I read, they're actually expecting them to beat and raise, and they're all pretty much bullish on it. Don't throw these guys into fast casual or some of the other parts of the market that are going to have a terrible next quarter. Mark my words, guys. The negativity that we saw on some of the retailers this quarter is going to start to transfer to the fast casual guys. It already has, really. And I think next quarter is going to be the quarter of slashing and burning all things fast casual. I firmly believe that. And we're definitely going to have to get in there and eviscerate a few of those guys because that's going to be entertaining. So I think the way to play it is trying this bullish diagonal. That's what we're going to do officially here, okay? I'm just going to say the trade that pays is the bull diag. And that is June, July, 70, 65. 65, 70 calls, 345 debit. That's what I'm going to say. That's the bullish stance I'm going to take. And if you're looking for lotto tickets on Dave & Buster's, they're very expensive. So I don't think you should do it. They're way too expensive. 75 calls are 90 cents. The 80 calls are 25. They're too expensive. The lottos are too expensive on Dave & Buster's. But if you want a more aggressive call spread going out to 70, 75, I think is the way to go. So that's what we got. That's what we've got, folks. So if you really want to play a lotto, maybe the downside lotto is the way to go. Maybe 60 puts, but I just don't. I would avoid the lotto. I'd avoid it. So I'm not even going to give you one, guys. There's not enough strikes. There's not enough options. There'll be plenty of lotto tickets out there. Just don't do it today, okay? That's my plan. All right, folks. How does that sound? Everything sound good? I think it sounds good. And yes, the eChat is public, my friends, which is fine. I invite everybody to come up in this eChat and talk about whatever they want to talk about. Oh, look at how many people we got in the room now. Absolutely. So this is great. And again, yeah, I was asking about if we should isolate the chat just for the premium folks or whatever. Not yet. I mean, look at how small we've got here, right? We don't have a bunch of people in this chat right now. If it starts to get, over the top ridiculous, then we'll go ahead and adjust, right? We'll fix it later. But for now, it's open to everybody. there it is, echat/room/213012 213012. I'll probably find a cute little URL thing that we can, like a redirect that we'll be able to use. I have found a way where I can use this as a widget, so there will be some sort of landing page that we're going to use over at Zach's, which is going to be cool. So we'll figure something out, guys. This will evolve. It'll get better. I appreciate all the help that everybody's been doing. And again, don't be surprised if we get off of YouTube also. It might be a whole different thing where they don't take care of, what they take care of now, because it would allow me to do promotions and stuff like that, which I haven't been able to do, because I got some great ideas, guys. Some fantastic ideas that I think you guys are really going to like, too. Everybody's going to like, because it's going to be a way for you to get out of having to pay for premium, basically. So I've got all sorts of ideas. So we're going to go ahead and go with that. And with that, I'm going to get up out of here. So thank you guys so much for hanging out with me here on Zach's Live Trader. If you're not already hooked up on the premium service, remember, shoot me those emails, livetrader@zax.com. Make sure you get connected. And again, guys, tomorrow we're going to be doing something. What are we doing? Amberella. 10 a.m. Central, my friends. 10 a.m. Central. We're going to be talking Amberella. Wednesday morning, we're going to do the morning after. I'm going to be traveling to Chicago on Wednesday as well. So I'll let you know later on in the week if I got time to do something Thursday or Friday or whatever, okay? So thank you guys so much for hanging out with me here today at Zach's Live Trader, and I will see you all mañana. Have a good one.